Hello, everybody. Welcome to the family. Welcome to the channel. So today's pattern that we're going to look at is a triple bottom pattern. Now, this pattern, its psychology is that it's a pattern that has three bottoms, as so, meaning that it touches a significant market structure three times before actually bouncing off and continuing with the move. It's kind of similar to the double bottom, but this one has actually, three bottoms. So it touches the market structure three times before actually pushing higher. So this pattern actually also has this neckline. Now, for this pattern to actually be valid, you actually have to wait for the neckline to be broken and then retested before you actually take a long position. So this is the basic market structure of a triple bottom. As you can see right here, it has to be touched by the market three times before actually breaking the neckline, retesting, and actually pushing further. Now, this market structure, they actually provide very good risk to reward ratios, anywhere from 1:4 to 1:6, depending on the market structure or the way the market has evolved in due time, because the distance from the highest tip to the lowest tip of this body or the triple bottom, like from the neckline to the lowest bottom here, has to be the same distance from the neckline to where your take profit should be, right? Now, therefore, depending on your entry signal or your entry position, will determine actually what the risk to reward ratios be, right? So let's actually just dive right into the markets and see how we can actually apply this and see how we can actually incorporate this into our trade. We're on CAD JPY. Let's see if we can actually look for a potential market structure. So far, nothing. So if you've noticed, some people commented that the videos are too long. So what I'll be doing is actually I'll be trying to minimize the time as much as I can so that we can actually save all each other time. Oh yeah, I think I found it. Let's see. Yeah, here it is. We do have a triple bottom. We're on the daily time frame, CAD JPY. This is 2017. So this is what is called back testing of the market structure, of the market prices, back testing on seeing if your pattern actually works or not. So this is the triple bottom, as it has touched the market three times. And then here will have to be the neckline, right? This will have to be the neckline. Right over here. Now, as you can see, the market came here, failed to break the neckline, bounced off, failed to break it again. And then on the third touch, that's when it broke, retested, and then pushed higher. As you know, I'm a break and retest trader, so I would have been looking for my entries after this retest here. For the breakout traders, this is where you would have been looking for entries, right? Now, our stop loss would be below here, right? Below the market structure, below the neckline. That's when the pattern would be invalid, right? The take profit would of course be the highest tip here to the lowest tip here, same distance from the neckline all the way up here. That is where your take profit is, excuse me. So that is where the take profit would have been, or was supposed to be have been placed, right? Right about here. And as you can see, it actually correlates with a certain market structure all the way here. So it's all good. Now, stop loss, take profit, your entries should be in around here, right? Depending on the type of trader you are, of course. So if you put it there, stop loss all the way down here, right? This is from the daily. So it's actually insane. Entries all the way down to the 4 hours. Let's see how it actually plays out in the 4 hour, because you can take an entry on the daily unless you're a position holder and have a very large equity. Now, I know the majority of the traders don't have that advantage. So I'm just going to help you out and see how to look for entries in the, in the lower time frames, like the 4 hours, where it's actually doable, or a person can save up capital to actually be swing trading in the 4 hours. Now, on the 4 hours, here we are. In the 4 hours, our entries would have been at around here after the retest, that spike. You see this initial push, and then here. Now, for the breakout traders, or for the real aggressive traders, would have taken the entry here, right? Stop loss below here, take profit all the way up there, giving you a potential 1:4, right? Meaning if you risk 1%, you're going to make 4%. Now, for the more conservative traders, would have taken the trade here, getting even better odds. Let's see, 1:6. See that? After taking the trade here, trade showed up all the way to take profit. Again, so this entry is at the neckline after the break and retest. Depending on the type of trader you are, that's where you would have gotten the entry to actually take your trade. This is the way it looks like from the 4 hour, first touch, second touch, third touch. This is the neckline, break, retest, take your entry, 1:6. If you risk 2%, that means you got 12%. So that's the end of the video, guys. If it's been of value, how to trade a triple bottom, give it a quick thumbs up and don't forget to subscribe. Till next time, guys, peace.